Hey guys, welcome to the channel. Today we're going to be doing a market update on Bitcoin and just going over some of the things that I've noticed on Glassnodes today. If you like these kinds of videos, like, comment, subscribe. Definitely check out our Patreon if you want access to some exclusive shit that you won't be getting here on the YouTube. I need you to remember something. This isn't financial advice. We don't accept liabilities for losses that you might incur, and everything here is for news and research purposes. So Bitcoin, we had a pretty big dump. You know, we're kind of recovering now. We're over the 50K mark, which is nice. I'm thinking that was probably the dip, so to speak. And it seems here that if you look on the 1 month chart, we could be heading into, well, we've already formed a little double bottom. But if you go onto the weekly, or this isn't exactly the right chart for this, but regardless, if you go on the weekly, you'll see that we're heading into double bottom territory now. So we've basically hit that point, we've cratered out, and we're going into the next step. And I'm thinking that this double bottom will play out probably for, I'm thinking end of February, early March. So I'm not thinking that we're going to be getting a December explosion and a January blow off the top. I'm personally thinking that in spring we're going to be popping off. But obviously this is speculation and not financial advice. For all you know, the whole thing pops off tomorrow. Or not. I can't tell you. But I can at least show you the information that I'm making my trades on. So first thing I noticed here was inflow volume. So recently Mt. Gox was talking about selling, and the first place that I wanted to look at was the inflow volume, meaning that if Mt. Gox actually wanted to sell their 150,000 Bitcoin reserves, they would have to do so in a way where, well, they'd have to actually bring it onto an exchange. So what do you see here? The news of Mt. Gox was announced when? Hold on. Gox. So yeah, you see here, November 19th, that's when they announced that they were going to be getting ready to sell their Bitcoin. And as you can see here, November 18th, the first major wallet transfer happened, meaning there was an inflow of about 66,000 Bitcoin that entered the exchange. That's one chunk, likely. Then what do I notice here? 50 and 50, meaning that's roughly about the 150K Bitcoin that Mt. Gox was talking about selling. So that potentially, what we saw, could have been Mt. Gox basically exiting and getting ready to pay off their shareholders and lawyers. So don't be surprised if in this month there's an announcement that says that Mt. Gox is officially sold. And don't FOMO out, or don't fudge yourself out if you see that article, because chances are these three major spikes that we're seeing is related to that. Maybe not all of it, but I'd assume a good chunk of it, because you see one spike, one spike, one spike. And when that spike happens, look what ends up happening, right? So what you see here is almost the exact opposite, is the outflow, right? So November 18th, as soon as whatever went into the exchanges came on, you see they're being taken out. And now you see this is the largest outflow right here as of today, which is basically a day or two after the dump. So someone took advantage of this. Someone basically bought this dip, because you see the Bitcoin was taken off the exchange right here, an outflow of about 73,000 Bitcoin. It's not a small amount. That's a pretty big amount of Bitcoin. It's about $4 billion that got taken off the market and put into someone's wallet, very likely. So I figured I'd let you guys see that. This is definitely awesome. You should check out Glassnodes if you haven't already, because it gives you all this analytics. Then you can see here the transfer volume of the exchanges. Hold on 1 second. I'll narrow it down to December. Hold on. You can see here, right? This is the transfer volume from the exchanges. Look how much it's gone up here. So you see it's almost relative to how much is being pulled out of exchanges. So these two graphs right here, they actually go together in tandem. Next thing, futures long liquidations. Look at that spike right here. Bam, from here all the way to here. That is a $280 million liquidation. Bang. That is a lot of people who lost their money right there. And I am not shocked, because you know what? If it's too profitable to knock out traders who are over leveraged, whales are going to do it, because they're the ones that benefit. They coordinate together and they just take people's money for free. So the more people go high leverage, the more they're going to take it from you. And that actually holds back the price of Bitcoin, because guess what? If people are constantly leveraging against it, it just becomes too valuable of a tool to liquidate people and rip their USDT out of their hands. Because people, if they want to gamble, don't be surprised when the casino takes your money, right? So that's what futures are. It's gambling that the price is going to go up. And as you can see here, the bears have clearly been taking a lot of money from people. You can see here, this is the open contracts right now in perpetuals trading. And you can see after that last round of liquidation how much got knocked out. Bang. Went from about $17 billion or $16.5 billion perpetual. And now the total volume is closer to about 9. So that's half the people that basically got knocked out or left the trade. It's a lot of money that got taken. And you can see here the futures volume in the last 24 hours. Check this out. Just Binance alone was 30 billion. You know, with the closest person at 8 billion. So there's a lot of volume in futures right now. And that is a very good reason as to why all their money is being taken out. And you can see total volume, not just perpetuals. If you look at the whole thing, it's over $100 billion right now in futures contracts. You can see after that $100 billion right here, you see the price of Bitcoin dropped. And that big drop is where everyone had their money taken from them. So that's more or less what these statistics are telling me. Naturally, you know, this isn't financial advice, but this is how I'm reading the statistics given to me from the on-chain analytics. If you guys are interested in looking at that for yourself, you should check out Glassnodes, because it's a really excellent resource. And we're going to basically cut this video here. If you watch till the end, like, comment, and subscribe. Check out our Patreon. Keep your eyes peeled for our Discord that's launching in Q1 of the next year, so around January. Take care.